Body 8:46 on Wednesday, the 17th. This is the day where everyone everywhere will be an expert on the Federal Reserve, including Don Kaufman and myself today at 2 o'clock. Be sure to join us to trade the Fed. We'll also have some special guests. I mean, Lyndon's got a view on this. Doji's got a view on this. Eric in Northport has a view on this. Obviously, this is the only thing happening in the world right now. So we have to treat it like that. They've got the balloons on the ceiling at CNBC. When they announce the 25-point cut, the balloons are going to fall from the sky, knock Kramer unconscious. Kelly Evans is going to dance. Everybody's going to be excited. It's going to be a wild, who cares? It's all theater, everybody. It's all theater. We're going to talk about momentum. We'll talk about the runner at 9 o'clock. And, of course, the Federal Reserve. And, look, I'm not stating that this is not important. Look, I went through this yesterday for an hour, the Federal Reserve announcements. Obviously, this is going to impact everything across the board. It's very important to have a deep understanding of what the Fed says it does, and we're going to break that down at 2 o'clock today. But it's also important to note that the actions that fall behind the scenes, the things that people aren't talking about, that's what really drives the markets, and the liquidity side and the momentum side and in the policy side that we don't see in the conversations that will happen today. We'll break a lot of that stuff down as well. Good to see everybody. Let's dig into it because, as you know, this is all about positioning. At 2 o'clock, the Federal Reserve will announce likely a 25 basis point cut, but there have been some pretty big bets in the last 24 hours that 50 basis point cuts could come in as well. Shock the market, send everybody running in a different direction. Like the rats in Ratatouille. 9:30 is where you will see large amounts of positioning start to move. You're going to see the same thing happen at 2 o'clock. And then as Powell speaks today at 2:30, look for some relatively sizable moves as well. We're going to break that down momentarily. Again, we'll talk about the stocks that are worth trading today, whether the market is safe or if this is a trap day, exactly where smart money is positioning. And we'll go through some of our screeners, but don't be shocked if some of the stocks that are breaking out now become breakdown stocks and vice versa. We will be digging into this momentarily. The only thing that concerns me is the Rays losing season. Time to break out my lightning apparel. Well, if you could just be an Orioles fan, you could have given up on April, and you'd be a whole lot happier. You could have distracted yourself with so many other things if you just would have rooted for the losing team. Momentum is now flat. Again, number of stocks breaking out, number of stocks breaking down, and we are paying very close attention to the good old FNGD, FANG inverse microsectors, and we have no danger at the moment. Obviously, we're paying attention to where this is around its key moving averages, and that just signals that this market is stretched, pushed up to 659, a little bit of a pullback, but we are near all-time highs because there's more capital sloshing around than ever before. It's the money supply. It's the optimism around AI. No, it's the liquidity, everybody. And we'll be digging into liquidity a little later today, why that matters. Secret Agent Charlie, good to see you. Thanks for showing up. Take a seat, have some coffee, or don't. And Mike, how about PL leading? All right. So as we dig into today, I don't have to make this any more complicated than it already is. The Federal Reserve, everybody, the central bank of the United States, founded in 1913. 6 years after the great financial panic of 1907, when J.P. Morgan had to bail out the financial system. Bank of America started on the San Francisco wharf while all of the banks had burned down in the great earthquake. And Bank of America, the founder, which was originally, I believe, called the Bank of Italy, had taken all of his gold down to the docks and started loaning out. And that is how you end up with Bank of America Day, the largest depositor in the U.S. If not, it's J.P. Morgan, but 1 and 2, very good. All the other Safes were superheated, so nobody could get into any of their money. And that is how you take advantage of crisis, everybody. 6 years later, Federal Reserve founded. We ultimately came up with the dual mandate, which is to manage inflation expectations and ensure maximum employment. But then somewhere along the line, maybe somewhere around 1971, something significant happened involving the US dollar and the reserve currency. And since then, we have boom and bust cycles around liquidity and around the fiat dollar. The Federal Reserve, despite that two very specific mandates, has been engaging in providing ample liquidity around the world, providing a backstop to the global shadow banking system, and ensuring that other banks and other locations around the globe have ample amounts of cash for refinancing in the event of liquidity events. But why does all of this matter? Well, we have rate theater today because rate theater is what used to matter. These are the things that everybody really worried about until the 1990s. And then a lot of these distortions began, be it inflation targeting, quantitative easing, all of the other things that they said that they would use to manage inflation. I want to remind you once again that interest rates are not the cost of money. They are not the cost of money. They are the cost of borrowing money. The cost of money is Forex rates, which is the diversion or the direction between the dollar and every other individual currency in and around the globe. Powell's press conference, blah, 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 will be at 2:30. He will put on a tie. He will use his hands. He will do this a lot. I want to make sure that you see that he's going to go like this. He's going to do that a lot. Go like this a little bit, and then he'll go like this again, and then he'll go. We can make a drinking game out of that. So what we're going to talk about today is the fact that look, there is there is was that a good impersonation? I think I might have topped it. Look, there is real impact here because again, you have all of these other all these companies that are very rate dependent, companies that might have floating interest rates looking for their rates to come down. You have banks in focus because banks have a significant amount of US treasuries that they bought at maybe 1 or 2%. When interest rates went up, the yields went up on those bonds. That drove down the price of those bonds. And that is what made Bank of America effectively insolvent a few years ago on paper. But once again, we continue to watch what's going on in the banking sector. The KRE had been selling off the regional banking stocks, a little bit of a pop today. I want you to pay very close attention to these key moving averages. As I laid out about a week ago, we were facing some pressure in the regional banking space because it was on Monday, the end of the quarter. Companies needed to pay their taxes. I had to pay my taxes. And then there were obviously concerns around the money markets. That seems to be passing at the moment. The key question will be the forward guidance statement that Powell will be making today at 2:30. So he's going to recap. He's going to explain what the employment situation looks like. He's going to talk a little bit about inflation. All of the numbers that he is going to be using are largely cooked, but doesn't matter. That's what the market cares about. That's how market is positioning. The market is positioning around the numbers, whether we believe they're cooked or not. And more importantly, he will provide forward guidance. And forward guidance is what will set the tone for the rest of the day. I remind you, when it comes to this environment, when it comes to actually looking for a trade built around what Powell will be discussing today, I think it's very important to always just prepare yourself for one very specific trade on this very specific day. And it's something that we have called in the past the 2:30 trade. Now, the 2:30 trade is pretty simple. What happens is as you pull out volume weighted average price, and we look at the SPY or we look at the Qs or any of the other major indices that we would like to trade, if we just go with the SPY, we have all of these standard deviation bands. This is the volume weighted average price, 1 minute VWAP. First deviation, second standard deviation, third standard deviation. What we have seen on these days in the past is a sudden and shocking move that starts with a move to the downside on the deviation lines, right as Powell is about to speak. And then what will happen or has happened, this is 2:30. We have had these massive pops that have happened after Powell speaks. And as we move into 3 o'clock, which is where institutions return back to the market, we have seen selling. So I want to simply note, I'm not saying it's going to happen. I'm simply stating that I am setting myself up that if these very specific conditions exist on this 1 minute chart and we have this breakout, I'm following the adjusted 20 and 50 EMA. So these are 20 and 50 minute charts. I'm looking for a pop. If it doesn't come, it doesn't come. I wait another month and a half for Powell to speak. But I am looking for the markets to cheer because the markets are looking for any reason at all times to keep remaining positive, and we're going to expect volatility. A little bit of a dovish tone may spark rotation to cyclicals. Once again, cyclicals, technology, and communications all run together in tandem in strong momentum environments. Okay, real quick before we get to the runner, I'm going to roll through this real quick. China, again, Johnny had been talking about this for the better part of a month and a half. And here we are. The money was already moving into China. We saw moves in things like K-Web, right? We saw strength coming in. Now the narrative is coming. Now the narrative is following the renewed interest in China. This is exactly what I'm talking about when it comes to momentum. We're looking for trends and ETFs and money to start breaking out. This has already been a 20% move in about a month on Chinese stocks. Gianni and I were talking about this last month, a 20% move. And now the headlines are showing up saying, hey, people are interested in China now. $19 trillion equity market, monetary easing, AI, biotech, semiconductors. Global capital may rotate back into EM. And yes, that is true. That momentum may remain, and we may continue to see strength to the upside. But I remind you that a month ago, the move had already started. And this is the key thing to remember about momentum. When things break down, like they broke down back here in April, people didn't know why the stocks were falling until a week and a half later. The price story started here. It started in early August during that little tiny negative momentum event. And the K-Web has gone from 34 to now 42.39. And now everybody's bullish on China. So it's very important to understand the technicals. It's very important to look and see where option flow is. It's very important to be forward looking and to say, okay, now that we're above these key averages, something might be going on. Might be time to take a little bit of a bet on this, because that's how you end up in a situation where 1.5 months out, a $250 option call can now be worth $6, $7, $8. And now all of a sudden you're getting the Barron's crowd coming in, writing the headlines. If you start to see China on the headlines of Barron's this weekend, bad news. The trade might be over. Finally, big stock movers today. NVIDIA has been choppy around this AI chips issue. Workday got a big bop after bop. Wow, what is the 50s? Big pop. Big Bop would be a bad nickname. Let's give that to somebody on our team. Who wants to be Big Bop? Don, who are we calling Big Bop? That's a bad nickname. Jordan. All right, Jordan, you're Big Bop. Workday 10% after Elliott investment stake. I will not trade around that. I want nothing to do with Workday. In addition to that, Tesla is easing after the Musk stock pop. Oracle continuing to move higher on that TikTok speculation. So look for some intraday volatility, risk of some sharp gaps in tech. And once again, take all of those names, ORCL, and take it back to volume weighted average price. And as we move later into the week, right, as we move later into the week, that's going to be favorable for options, particularly if you end up down here in any of these situations where we move into the 4 standard deviation, to use short dated options, stay in the money into Friday, and look for a reversion. All right, 15 minutes in, that just absolutely nailed it. Let's do the runner. I don't know where that was going, but it's fine. Mm-hmm. Very exciting times. What else do I have on this? Oh, see, when you haven't changed the soundboard in 3 years, you never know what you're going to get. I know there's a What About Bob reference on there somewhere. Okay. Geos. So interesting to see this name back in play. We've been talking about the energy sector, and this has just been a very bouncy oil and gas. This is a company that basically does surveying of oil reserves, and as always, more money flowing into this. Very nice little momentum stock that has provided some pretty solid moves off of these 50-day moving averages, then pushing above the 50, the 8, and that 20-day. So what am I looking for here? Well, another move higher, obviously. So what can we do with Geos? Take a look at the options chain and see if we can find anything. I would imagine we'll find something. It's always something to trade. All right. Take your time. Just take your time today, everybody. All right. A little wide on these spreads, I'm not going to lie. But that said, if I can fill that, man, I'll buy the stock. I'm going to buy the stock at 7. I'm going to buy the stock at 18. My stop is going to be 17. It's going to be an adjusted 8-day line. It's going to be about 17. It's going to be about a 2% stop from there. So that'll take me down to about, do some math, Garrett. Come on, you used to be good at this. 36 on 49. Wow, I'm bad at this now. 1749. Nailed it. Stop it.
Here in New York,
No.
this is
Oh, I got to change all this stuff. This is terrible. That's not funny. PBF continuing to rock higher, coming off of that huge low down here at $14. Carlos Slim loading up on this stock. You'd think that this thing doesn't have some legs to it. It's got some legs to it. This is a cyclical move. This is a big, big, big rebound waiting to happen. So PBF, I'm selling spreads down here. PBF, energy, refineries. This is a stock that Mr. Carlos Slim has been loading up on, and we've been talking about Mexico and its issues involving Pemex. They need refining technology. They need refining expertise. And guess who has it? The company that is getting frozen out of California. Let's go out to the 19th. Let's go, 19th of December. Kind of like this, actually. 26. Writing the 26. 24. It's going to be a big number. All right, let's move it down a little bit. 25, 23. Numbers should be a little bit cleaner. There you go. So PBF at the $25 level is here. So you're under these key moving averages, holding above that 200. Again, Carlos Slim's bought an incredible amount of this stock. Probability of profit here, 80%, 70% return on risk, annualized at 119. That is the December 25 put, writing that and buying the 23 as protection. If you want to increase your probability of profit and you're happy taking a little bit of a lower level, this is another way to do it. 11% on 81%. That is the 22.24, and the annualized currently at $43. So one of two ways to do it. I prefer the higher probability of profit, to be very honest with you. Obviously, there's been some volatility in PBF. We've seen that, but this is an upswing stock. And again, it's good to own refineries. It's very good to own refineries. It's one of the grand secrets of the Eastern Europeans. NVIDIA chop it around a little bit. I'm not a guy going to try to take direct aim at NVIDIA unless we are under this 50-day moving average. And more importantly, the FNGD is breaking down or is breaking out. But keep an eye on NVIDIA. As we've noted, so goes NVIDIA, so goes the market. Looking at that, HCA, again, another healthcare stock under pressure. It's a tough time. It's a tough time to be in the old healthcare space. Breaking down, the whole sector's in trouble right now. So I actually like pushing down toward that 390 level. See if we can retest that level. You got the 8 coming down over that 20 right now. Short HCA. Anything I can do here with that? Let's go put spread. How wide are these? This is always the concern. What do you think, Big Bop? You in on this one? Classic Big Bop. Short duration. I mean, these spreads are too wide. Can't do anything with it. You're going to have to set your price. All right. Well, anyway, bearish on HCA anyway. Ozark. Look, regional banks, this is the one you got to pay attention to because this was one of the banks that was under a lot of stress during the regional banking crisis. We break under that 50-54 level. You're buying just a straight put, maybe at the $51 level, and you're looking for continued motion to the downside. Again, the regional banks are still under pressure. We have reserve concerns at the moment. And again, we'll be watching the SOFR in the coming days as well. Stocks breaking out, well, shouldn't shock you. We have been seeing very strong movements in cyclicals and communication services. That is basically these three. These are the core momentum drivers of the equity markets. That's where there's a significant amount of leverage as well. Right now, watching materials break down a little bit. Gold's giving up some of its gains. Silver giving up some of those gains. Big run, but as we've noted time and time again, all signs point to higher monetary inflation and higher deficits. And higher deficits lead to these types of results. So I'm not touching the GDX at the moment. Again, I would be willing to sell spreads down here, but this is very stretched. That is a very big move up, and we are overbought right now on gold. Would not shock me to see some profit taking. Obviously, some lower concerns around the economy, around auto loans, and we're seeing some worries about the housing market as well in 49 of 50 states. We will continue to monitor that as well. SD, Sandridge. Pretty good strength here. 1150 EMP. Again, I'm not huge on trying to trade EMP unless we are overbought or oversold in the entire sector. But if I'm going to speculate here and try to go to the upside, you go out to Feb. I mean, these chains are just so weak. It's brutal. It's brutal. But that's not terrible. If you can buy, it's actually pretty wild. If you can buy the October 17th $10 call for $1.80 on this stock and have 5 cents of time, 4 cents, yeah, and you just set a stop back at like 150, that's actually pretty interesting. So SD yesterday was at 173. This is a pretty good one, actually. Pay the ask. Set a limit at around that 175 to 180 level if you can. That's a high probability of profit for just a straight in the money call. 46%. So you get it back up to $12, 12.10. You might want to look this one up on Ghost Print, see if anybody's doing anything. You get to 12.10, 20% gain right there. Keep a tight stop. SD, October, $10 call. Gotta like that. HLX is the last one. Another one of these. It's one of these big blue things. I don't know anything about this company, but I don't like the weakness on the MFI. I'm scratching that. Too much EMP. Get me out of here. All right. 9:12. Today's schedule, please. Both rooms. All you need to know. All you need to know. I like that call, by the way, Don. Shorting gold. I really like that. Let's go down to like 3,400 so I could buy some more of it. The Big Bopper, Chanceley Lane. We're on a plane. Buddy Holly. Who survived? Waylon Jennings? Waylon Jennings lost, right? Didn't he? Lost the seat. Yeah, I do too. I actually really like shorting. I might even go. Hold up, GDXU, GDXD. Ha! Look at that. Look at the decay on that. Holy mother! They're gonna have to reverse split this soon. Oof. GDXU. I bet it's cheap to short the GDXU right now. Let's see. Do a hero put, straight long put on the GDXU. Is he already doing it? Look at that guy. Just making moves. How about that? Yeah, there's not a lot of, there's no, okay, so let's just look at that's the GDX options. All right. GDXU option. I thought that there was a options chain for the GDXU, but there might not be. There isn't. Wow, that actually is shocking to me. It's shocking to me that they would not have triple leveraged ETFs and F options on gold, but you want to do it on MicroStrategy, go to work, everybody. You want to lever up on a triple ETF built with swaps on the backside of Bitcoin combining with your Ethereum? Yeah, go to work. You want to actually hedge gold? Nah, can't do that. What is happening? We live in fascinating times. I believe it was Waylon Jennings. Let's find out. We have the internet. Jennings gave up his seat on the 1959 flight that crashed and killed Holly, Bopper, Richardson, and Richie Valens. God, that's got to be heavy. And then you hang out with Johnny Cash the rest of your life. Oof. And Hank Williams. That's a lot. That's a lot. All right. How else can we short gold? I don't want to just short the GLD. I don't like shorting futures. No, what this is? Oh no. Okay. I like this though. I like GLD down to like 320. Just run it into the ground. Let's do it. 320. Like, where can we go here? Let's go out to September 30th. Come on. You can do it. This is one of those things where you go back and you look at it and it's like a Taleb black swan trade where you just go, all right, whatever's $1 out 3 weeks for the downside, whatever the put is, that's what I'll do. Just in case this just blows up. How you shorting it, Don? Come on. You can tell us. Uh, 313. That can't be right. 337. November 24th. I'm going to have to find something. Pay and find. There you go. I like that strategy. You got to be here at 9:30 to find out how Don is shorting gold today, because that's going to be one of the many trades that we're going to be talking about today. I'll be looking at the volume weighted average price swings, and he's going to short gold. So what you should do is, if you're not a member in our member room, name your price, click the link, find out what Don's doing. He's going to be here in 13 minutes for a gold trade. First big trade of the day on Fed Day. I like it. I've got the conviction on it. I might just start going outside and throwing gold coins at children, hit them in the head and tell them to bring me a Christmas goose. So hopefully the Christmas goose will be worth more than the gold will come December. All right, on top of that, just heading over to Uncle Stock real quick. Don loves Uncle Stock. He's got a CompuServe email. What else can we talk about? Go back to FinViz. Good. No, what were the old, what were the old school screeners? It was like Uncle Stock. You had CompuServe just to, communicate. Uncle Stock's not that old. It's some dude over in like Bulgaria. Come on. I've talked to this guy. He's like, I really appreciate that you like my screener. He talks like that. It's awesome. F score. Get to the chopper. All right, remember, 7.8. Get to the chopper. Ask Jeeves. Oh, man. I feel like they had a chance to sell that company for like a cartoonish amount of money. And they didn't. Ask Jeeves. Man, what a terrible idea that was. Last thing is our SMA. We're pulling up the 20-day. We're going to go to -3% just to see what else pops up on our screener. We do not add financials, and we do not add financials because financials are measured on tangible book value, not price to gram, totally different animal. Let's dig in. Let's get all results. I want all results. Anything new? Anything exciting? There's Joy. Joy keeps popping up. All right. Things that you need to be paying attention to for potential rips above that 20-day EMA. Let's see what we got here. It's going to take its time. There we go. There we go. There we go. All right. Canon, no. Tripoint, no. Susano Papali Celiosa. That's not, sounds Italian, but I think it's South American. Yeah, whatever. Taylor Morrison, pay very close attention to TMHC. If it breaks above its 20-day moving average, if housing stocks get a boost, TMHC is your friend, but only if it cracks back above these key moving averages. Very important. TMHC, Greenbrier, Goodyear, Matson, Clean Energy, NOG, Sasol, SSL. Pretty good specialty chemical. Again, South Africa. Who's in that? VLGA, by the way. Again, you just have to be very patient with these names. VLGA was under so many of its moving averages recently. And now look at this, right? A $34.50 to a $40 move. It's not a sexy company. It just does this. We just get these moves constantly, in and out. 20-day moving average. And Weibo, woohoo, my favorite. You're my favorite, Weibo. Look at that. Pure momentum off that 20-day break, 990. Okay, there's the lesson. There's the story, right? Weibo, when it pops above its 20-day moving average, speculate on it. When it breaks under, get out of the way. It's just a thing to trade, but it is a great momentum stock. And as you can see, holding above that line, that's a big move. 980, nearly $13 in a month and a half. Don's coming up. He's going to tell you about gold. You got to pay money to find out. That's all you got to know. He's next. He's coming up. He's throwing on the music. Don and I are going to be back here at 2 o'clock for the Fed announcement. We will take you through the 2:30 meeting, and then we've got our 2:30 announcement, and then we got some special guests. Blake's going to come in. We got Brandon coming in. We're going to bring everybody in. I think even the big bopper is going to be there. And Jordan, he might have something to say. We'll find out. Everybody have a great day. We'll catch up soon.